Welcome back, YouTube. So, have you been wondering the last few days what's going on? Have you seen the CPI numbers come in red hot and the market took off anyway, as it appeared that the market ignored those fundamentals that we basically aren't going to pivot anytime soon. We're probably going to get that full 0.50 that we have left that's projected. Even though we've had a few people say they kind of expected it from the Feds, to say they kind of expected it to be an increase at least month over month, but that's not what they said last month. But we know how these revisions go. But the market just kind of took off and ignored all of it, and everything seemed well. Bitcoin was rallying, Doge, Ethereum, everything just taken off. But we're seeing the correction right now, and this is one of the reasons why I tell this video the numbers don't match. And this is one of the reasons I know sometimes it's a little boring when I say we need to wait for these candles to close versus assuming where they're going to close. This is some of the reasons why I'll release videos a little later in the day, because I don't want to give a presumption on what the candle is going to do. And this is why I put perspectives on short-term and long-term time frames. And it looks like these candles that were relatively up high are closing downward. And this is normal. And this is what technically you should have been expected if you're going to see these rallies here, but the overall macros don't align. Let's take a look at the charts. So here you have Bitcoin, which pretty much was over 25K at one point. And as you guys know, that was a very fundamental point, because over that, at once anything over 25K, we start getting in gap territory, and it can get crazy from there. And 25K can turn into 31K, but we need to break that level with strength, not just simply rise above it. I think that's sometimes what a lot of investors get confused, is saying that, oh, well, we broke it, so we're good. That's not the case. It has to show strength above that. And as you can see here, massive rejection from that level. And now we're back down to the 23 range. We're not showing strength at these numbers. And that's why the numbers are not matching the price action. So what we are most likely are witnessing, whatever you want to call it, bear market rally, relief rally, pump and dump, whatever you want to call it, many names for it. But these numbers that we're seeing are not showing strength. And that is very important when you're trying to chart a breakout or chart price action, even for the short term, long term especially, but even for the short term, if you're trying to anticipate it, you're going to need to wait and say, okay, where's this candle going to close? If it's not closing at this level, then yes, it tested it, but now you're going to have to retest it again. So, and you're going to have to see, okay, where is it actually building up strength? And it's building up strength here in around the 23 range, which is fine. It's not a bad thing for Bitcoin, even for the markets. It really just depends on where we're going to see this consolidation, because we're still technically green, at least for today. Where we close now is going to be really relative to the short-term time frames here, because it's not prominent that we'll fill this, because we do have some support here again, which is really great as far as showing strength, just like kind of proves my point that I just was saying here. So it's not indicative that we'll fall back down to the 22 range, because we do have some support here, but it's just something to keep an eye on so that you can know if you're looking to get in or trade or whatever. It gives you some perspective on your time frames. Let's take a look here at Doge, looking at crypto. Yeah, same thing from Doge. We've seen the rally, which wasn't really tied to the Bitcoin rally. It's more so to the tweet from Elon saying the Doge coin is going to be the new CEO. The Doge is going to be the new CEO of Twitter. So you saw like that rally, and then we had kind of like a sell-off here. Still green though for today. So again, we're still technically on this slope here, on this incline really, which haven't kind of broken since we had the sell-off. So we kind of bounced off of the previous resistance line and have been trending upwards. So we'll see where this candle closes. And we have to, let's take a look here at Ethereum really quick. What am I doing? I need to go to crypto. There we go. I go. Same thing. The Ethereum was tracing Bitcoin to a T. Rejection here, green for the day, and it's consolidating roughly where we have that support. Again, not indicative that we'll have that breakdown. What really, and this is what the point I was making for Ethereum, for all of my fellow Ethereum holders, this is what we need. This was the most important thing. I don't really even care what it does here, as long as, even if it just trends sideways, that rejection here was absolutely crucial. This is what I meant the other day. If we broke down if we broke that level with strength, we're talking about the fall to Jesus. And this is it. Maybe we'd catch ourselves at around 1,300, maybe, but we're talking about at least $300 off. On the worst case, 400 or $500 fall right here for Ethereum. So this pivot here was very crucial. Still walking kind of a fine line here, depending on where these next few candles close. Again, not indicative that we fall, but anything below, I'll say 1550 roughly, it's time to start, this, if you're looking to get in or whatever, this is just keep an eye on this range here, because this can be a nasty fall for Ethereum, depending on, obviously, if you're looking to get in, then it'll be great, but just kind of keep it on your radar so that you can be up to date with any potential entries or sells, depending on however you're playing it. I'm not telling you how to play it. So just kind of keep that on your radar. Same thing here for ADA. We're still in the incline. So there's actually more. So this would actually be a little bit more difficult for ADA to fall down. Quite a bit of range here. But yeah, I wouldn't panic anything above 32, at least for now. And this is just eyeballing it really, but yeah, I wouldn't. So ADA is in better shape than Ethereum when it comes down to reversal. So that's something to kind of keep in mind here. And even here, when you're looking at something like SPY, we've seen this roller coaster here. We have to make sure that we're keeping an eye on this, because we have a few fundamental points, and then we can be back into well into the 350s again that we're looking at. So what we're looking at really here is to see whether or not we're going to close above. I'll say, even if you're just looking at the ranges here, we're certainly in position here to go back into the 390s here in the short term. And in the short term, I'm talking about the next few weeks if we don't build up some strength here. We're looking at 407. I can even see the momentum kind of sliding here, even volume-wise. And even if I'm looking at reversal percentages, yeah, I'd say it's very prominent if we don't build strength here. And we have a short week next week as well. But if we're not building strength next week here, we're going to probably go back into like the mid to low 390s is what it's looking at right now. And again, not a bad thing, because we can this is what's to be expected when we miss CPI numbers, and we're expecting some revisions and stuff next month. And we're counting on the pivot, these numbers to be positive, for us to have a pivot to either announce a pivot time frame, or to say, hey, we don't need the full 5.25, and we can either pause right now or do another 25 and pause. There were two catalysts for us to have that positive confirmation, and of course we missed all of them. So obviously it's up to Powell and the Federal Reserve, but I just believe that it's unlikely we're going to have that pivot now. At least we're certainly not going to have a pause next month. But I just believe that we're probably going to get that full 5.25, and may even hold there as they gather data. So I think we're probably going to get the 5.25 and then pause and kind of see where things go on a month-to-month basis after that, see if we're going to kind of kick that up or not. And as we all know, that's not going to pivot the expenses to borrow money. So anything with auto loans, credit cards, mortgage rates, all that kinds of stuff, that means we're going to stay higher for longer. So this is what we're seeing in the market here, these consolidations, that money, that liquidity coming out. This is big money, institutional money, and retailers adjusting time frames for their money allocations, which is to be expected. So I don't think it's anything to be panicked about, at least not right now. Market-wise, biggest threat is whether or not we're going to over-tighten. But obviously that's TBD right now. So the biggest thing is we're going to have to just kind of chart this to see where the best entries are going to be, which is what I'm going to be doing over the next few days. So stay tuned for that. Let me know what you guys' thoughts are on this correction / this is what should have happened the first time that we're seeing right now. And I will look forward to chatting with all of you in the next video. Subscribe, share the video, like, all that good stuff. And I will see you next time. Thanks.